Are we gearing up for a housing crash? Everyone is quite surprised that despite interest rates hitting near 8%, stubbornly high inflation, and even war and global unrest, that the housing market is still grinding along. Maybe limping along is the better word.
Actually, it's pretty limp, sir.
A big percentage of Americans want a housing crash, according to a new poll that we'll discuss. How likely are we to see a crash, and would that even help people that are rooting for a crash? We'll also be going over the stats for the Murrieta, Temecula, Menifee housing market in the second half of the video. We're getting into it today. Hi, I'm Jessica with the Genung team and Real Broker, and today we're going to be diving right in. A recent poll by LendingTree found that 35% of Americans want a housing crash, including 53% of Gen Z and 46% of millennials. I happen to be a millennial, a senior millennial, I always joke, and I am not one of the millennials that are rooting for a housing crash, and I'll explain why in just a minute. Of course, young Americans that don't own a home yet would like for real estate to go on sale. But get this, the poll also found that 36% of homeowners surveyed hope for a crash. The reason for this finding is that 15% want to lower their property taxes, and another 15% believe that a correction would help stabilize the market. The poll also found that more people think that there will be a crash in 2024 than people who think that there will not be a crash in 2024.
Okay, it's happening. Everybody stay calm.
What's the procedure, everyone? What's the procedure?
Stay calm.
Wait.
Everybody calm down.
44% think that there is going to be a crash in 2024, and 24% think that there is no chance of an implosion. The poll also found that age correlated with opinions of the housing market crashing. The older you are, the less likely you are to think that the housing market will crash. Conversely, the younger you are, the more likely you are to think that the market will crash. I get it. I was a first-time home buyer back in 2010, right after the 2008 Great Recession and housing market crash. My first home was a Freddie Mac owned foreclosure that was only 6 years old, and I was able to purchase that home for about 50% of what it sold for back when it was brand new. The 2008 housing crash did help me become a first-time home buyer, but it was by no means an easy time to buy a house. People think that just because prices drop, it's going to become easier to buy a home. No. It was still a really difficult time to buy a home. I was up against multiple offers on every home that I went after, and I lost several homes before finally getting my offer accepted. And then my loan almost didn't get approved because the lending environment was super strict, much tighter than today. And it was also tough because I had chosen Bank of America to do my loan, and that was my first mistake. Never again. At this time, I had just started in the real estate sales industry the year before in 2009. I was an assistant for a big REO broker that sold hundreds of foreclosures a year. They had all the big accounts at that time, Freddie Mac, Fannie Mae, and many banks as well. Freddie Mac alone was contracted to assign them a minimum of 30 listings per month. My job was mostly in field services. I started at the bottom, but it was great experience.
Started from the bottom, now we're here.
My job duties included checking on the properties every week or so. If they were in pre-foreclosure, I would drive by to see if the homes still look occupied and report back. Once the home foreclosed, I would negotiate the cash for keys with the owners or the tenants. After the property was vacant and ready for sale, I would do property checks to make sure that everything was good, utilities were on, etc. If an interested buyer called the yard sign wanting to see the property, I would make that happen, and I'd write and submit offers for those buyers as well. It was a good intro into real estate, although not glamorous, and I have some interesting stories from that time. I tell you all of this to say that I have firsthand experience of what a housing market crash really looks like. Every investor and their mother came out of the woodwork during this time and were purchasing the foreclosures. It seemed like most of the buyers for our properties were investors back then. So my offer that I was making on these homes trying to purchase my first home was often getting beat out by these cash investors. One of the first offers I made was for a home that my brokerage was listing for Fannie Mae, and I couldn't even get my offer accepted. I bid like $10,000 higher than a cash investor on this property, again, that my brokerage was listing, and I couldn't even get it accepted. Because there were lots of multiple offers going on, buyers were still having to bid over the asking price pretty regularly, and cash was still king, especially back then because of the tight lending environment. It was more risky to accept a financed offer, especially back then. A couple years into the crisis, crisis, Fannie Mae enacted a rule that for the first 30 days of a listing on their properties, they would only consider owner-occupied offers. They were one of the first entities to make this rule because they saw what was happening with investors swooping up all of the properties. When I brought up the fact that the investor buyer with the offer that they were accepting for the property that I was trying to buy was not going to be an owner-occupant, the investor just lied and signed a form saying that they were going to occupy the property. There was lots of hokey-pokey stuff going on in those days. The point of the story is that even if the housing market declines, it doesn't mean that it's going to get easy for buyers. There will still be challenges. Not only did the housing market crash in 2008, but the stock market crashed as well, obliterating people's retirement savings, and unemployment reached like 10%. It's hard to buy a house if you don't have a job. Gen Z and millennials that want a housing crash, they are overly optimistic about that possibility, and they are not considering the wider ramifications if we do see a sizable housing market decline. Baby boomers that think a housing market crash is not good and not likely to happen will prove they are older and wiser, as the saying goes. Anyways, that is my crystal ball prediction. Time will tell. If I do see the market shifting, I will be letting you know ASAP, as I have done so before, so make sure that you subscribe to the channel so that you can be in the know. About 2.5 years ago, I made this video detailing out all of the reasons that I thought the housing market was not going to crash. Most of the reasons that I give there are still applicable today if you want to go back and check out that video. I'm not going to rehash all of the reasons here in this video, but basically I still see no signs of a crash. I think unemployment would be the most likely reason for a housing market crash or a correction right now. The number of homes for sale and sales volume has certainly crashed, but fortunately for sellers and unfortunately for buyers, housing market prices have remained steady, with many areas increasing year over year. Enough about the what ifs of a market crash. Let's get into what is actually happening in the Temecula Valley housing market. There are some interesting stats here this month, actually. Spoiler alert, Temecula has seen a huge increase in the median sales price of a single family home year over year, an 11.3% increase year over year. Let's look at the stats. As always, we are only looking at the cities of Menifee, Murrieta, and Temecula, and we're only analyzing single family homes for simplicity. So starting with median sales price, that's the stat that everybody is usually most interested in, and starting with the city of Menifee. So month over month, we do have a median sales price increase of 2.3%. It's about $12,000. Year over year, Menifee is up about $25,000 or 4.7%. Murrieta actually month over month has decreased quite a lot month over month. So if you look at so 2023 is the red bar chart if you're looking at my slide, and anytime we see this month's number drop way down, it normally does bounce back up, normally at least halfway the next month. So we'll see if this is a trend or not. But month over month, it came down like $42,000 to $640,000. And actually there were some large sales in Murrieta too. There was a $3.5 million sale out in La Cresta and several $2.5 million sales. So even considering those, the median sales price was $640,000. Had we taken the average of all the home sales in Murrieta, it would have been over $800,000. I did run that number as well. Murrieta, by the way, year over year is the only city with a price decrease year over year now, because this month's decrease was so steep that put us into a year over year decline. Contrast that, we're going to move on to Temecula is pretty opposite. So they had a slight decline month over month. I call it pretty much flat. It's only a $2,800 decrease or 0.4%, so less than a percent. But year over year, the sales price in Menifee has increased 11.3% or $78,000. So that is a huge, for this market, when we're looking at nationwide stats of other major cities, Temecula is definitely gaining more than the average. Also, the gap between Murrieta and Temecula is widening currently. So we'll see how it plays out over the next couple months, but I thought that was an interesting stat. We're going to move on to closed sales in Menifee. Month over month, we are down 26.4% or 32 homes, and year over year, we're down as well, 25, about the same, about 25%, 31 homes. So month over month, we're down. Year over year, these are November stats, and we're rolling into the holidays, so this is a normal seasonal slowdown as far as I'm concerned. Inventory is still super low. We'll get to months of inventory here in a minute, but normal to see the decrease as we head into the end of the year. Murrieta closed sales month over month is down 32 homes or 30%, and year over year it's down 25% or 25 homes. So Murrieta and Menifee are pretty similar. Moving on to closed sales in Temecula, number of closed sales month over month, we have all three cities have decreased, as I said, so 16.3% month over month or 16 homes, fewer sold in November versus October, and year over year, Temecula is actually the only city that is up, just 2 homes though, so I'll call it flat, but it's up 2.5%. Median days on market, how long is it taking your typical home to sell? Starting with Menifee, month over month is fairly flat. It is taking 1 more day to sell a home in Menifee. Year over year, it is taking 8 days fewer to sell a home. So that's interesting. So the Menifee market that stat anyway, appears to kind of be on the incline, let's call it. For Murrieta, month over month, this one is kind of interesting because it's drastic, like the price decline. Month over month, it is taking 10 more days to sell a home. So percentage-wise, that's like almost twice as long to sell a home. So 12 days in October versus 22 in November. So that makes sense that the price would decrease, as we saw in the last slides for the median sales price, because the longer properties sit on the market, the more negotiable, motivated sellers become. So those stats make sense to me. Year over year, we have, it was taking 47 days last November in 2022 to sell a home. So the 22 days is, what is that, 25 days quicker. Yeah, 25 days quicker to sell a home this November versus last November. So year over year looking good. Median days on market in Temecula is decreasing by 3 days month over month. So selling 3 days quicker, and year over year selling way quicker. So November of last year, it took 36 days. November of this year, it's taking 13 days. So homes in Temecula are selling the quickest, and they are still flying off the shelf. You know, 13 days on market is like nothing nowadays. A number of listings, so this has to do with our inventory, and we're going to talk about the months of supply as well. So I'm not even going to touch on the year over year numbers because we know our supply is way down, and it's down 40 to 50% in each city. So way down, just call it half in each of the cities. So we'll look kind of more micro at the month over month stats. So month over month in Menifee, the number of listings are down 2.9%. I think that's 7 homes, and that's a normal seasonal slowing as far as, you know, less people are going to want to list their homes over the holidays, November, December. So that makes sense to me. Murrieta, month over month is down 19 homes or 8.4%. Oh yeah, let's go back to months of supply also. Actually, months of supply very similar in all 3 cities. So Menifee months of supply is 1.9 months. So if no new homes were brought to the market in Menifee, all of the available listings would be sold in 1.9 months. So less than 2 months. Murrieta is 2 months exactly, 2.0. Moving on to Temecula, number of listings. Let's do months of supply for Temecula as well. 2.1 months of supply. So all 3 cities are right around 2 months of supply. So that's still very, very low months of supply. You need to get up into the 4, 5, 6% is the industry considered months of supply number for it to change into a buyer's market. So we're still in a strong seller's market. Number of listings in Temecula are down 2%. We're down 4 homes, so that's fairly flat. So those are the stats for this month. Hope that you guys found that interesting. I'm going to link that video that I mentioned earlier in my commentary if you're interested in going back back to watch the one that I made 2.5 years ago, where I list all of the reasons why I think that the market is not going to crash. That was back then. I still think that a lot of those reasons apply now. Go ahead and check that one out. It also has kind of a funny SNL clip in there that we snuck in there. So hopefully you guys have fun with that. We love to be your resource of choice when buying and selling homes here in the Murrieta Temecula Valley. Feel free to reach out to us, and thanks as always for watching. Bye.